Money Radio for a really great future. We're talking real money.
Well, if any of you were ever worried about the U.S. running out of food, I want you to stop worrying. I can personally attest to the fact that there is more than enough corn for us and other planets.
We drove by enough corn today for us.
Well, you have hardly driven by corn compared to me.
That's a good point.
I did like hundreds of miles of corn.
And it's way up high. It's high as a, what did you call it, elephant's eye or something.
I borrowed that phrase.
That's a good one.
Do you know what I borrowed that from?
Not from me.
Not from you.
No, okay.
What is that from?
I don't
You
know.
do not know what the corn is as high as an elephant's eye?
Know, because there's not that many elephants here.
Oklahoma.
Was that there? Okay.
Yeah.
All right. Well, the wind does come whipping down the plain. Here.
Hey, everybody. Hi, Don McDonald. And guess what? Tom Cock here in a park in Madison, Wisconsin.
I tell you what, this epitomizes the Midwest to me. You drive up, every turn is a hard. It's like a square.
It's hard right, hard lefts, hard rights.
They put them in after they plotted the land. Beautiful small homes. This park is incredible, but mile after mile of corn to get in here. It's really something.
And he's talking not the metaphorical corn that he is known for, but the actual real corn. The kind that people eat. And I was driving through the cornfields going, why so much corn? It was like corn, soybeans, corn,
soybeans too. Sure.
Soybeans. Yeah. I'm going, why so much corn? And then it occurred to me, ethanol.
And they still use a lot of it for that. I think it's like a third of the crop or some ridiculous number.
Yeah. So there's a lot of corn in America.
And thank you all who are, I know they're out there listening. Everyone, literally every person I've met here in the last 2 days, so nice. So pleasant.
It's the Midwest.
I tell you what, it's just been friendly. At the hotel, hi, how are you? It's been really great.
Even the birds.
The birds are approaching us, and we don't even have any food for it. Like, dude, you're not coming to the right guy here. But
the food will be here later.
Yeah, that's true.
So anyway, welcome to Talking Real Money. I'm Don McDonald, Tom Cock with me, and as always, usually, unless he's in Africa. Yeah. And if you want to call us, you can do that. You can call us in the park at 855-935-TALK, 855-935-8255. Those birds are very
They're loud. And by the way, if you call from Wisconsin, you move right to the head of the line.
Oh, did you hear that? They get to move to the front of the line if they call from Wisconsin.
Everybody else moves back, but you're right there. So.
Do you really think many people are listening to us live in Wisconsin?
I think I met with them the last couple of days.
They have to listen online.
I know. They were asking me how to do it on their phone.
The radio signal will not get to them from Seattle.
But they asked me how to do it on their phone, and I told them I'd tell them how.
So it's an amazing new world we live in, isn't it?
Crazy.
Yeah. No, actually, it really is an amazing world we live in. You're just fascinated with that bird, aren't you?
It's just not going to let it go.
It's not going to let
Dude, there's no food for another 3 hours or something. Go away. So not going to work.
Anyway, let's talk about money, shall we? Even though we're in this beautiful park and we don't want to talk about it, we really should because that's our mandate. And one of the things that particularly younger investors, but oldsters too, we hear from them all the time,
oldsters.
Where can I get a higher interest rate? Well,
at no more risk.
Right, at no more risk. I want more interest. I don't want to take any more risk. Well, let me tell you, not only does Wall Street know how to pander to your requests, but apparently Silicon Valley is also very keen on catering to your desires.
And this isn't even funny because people lost millions of dollars here. I mean, these are people that put money in what they thought was an FDIC insured bank.
Well, they thought it was because of a very convoluted way of creating that. It was deposits in an institution that put the deposits in an FDIC institution, supposedly.
Right.
And the problem with that is you got to know what's wrong from the get-go because there are too many middle people in the middle.
And that's what's happened now. Where's the money? Well, I gave it to Joe. Joe gave it to Bill. Bill gave it, and nobody seems to know where it is.
Yeah, what was these companies like Synapse, Financial Technologies,
if your money's there, you might want to check.
Juno, Yield Street, yada.
Yeah, yada. A lot of money.
These guys would raise money online. And then they would deposit it in big chunks, they said, into FDIC-insured banks to get you secondhand insurance. Is this like used insurance?
But they were offering some ridiculous rates well above
Well, above the four or so that you can get at a bank if you're a friend of the bank.
Yeah. Well.
Yeah. You get 0.1 if you're not a friend.
We've covered that territory.
And there's a lot of this going on. And we want you to understand that most of the time, these things are fine right up until the day they aren't. 855-935-TALK is our phone number. Give us a call.
Tom and Don are talking real money.
In medicine, a second opinion might save your life. With investing, a second opinion might save your future. The trick is getting one without a high-pressure sales pitch. Well, I'm Don McDonald, and if you've been listening to Talking Real Money, you know that our goal is to help everyone create a brighter future by investing and managing money better. That's why, in addition to helping everyone on our show and podcast, we are also committed to making our 100% fiduciary advisors at Appella available to help everyone make the best financial decisions based on science. So if you're being pitched a financial product or a system, make sure you get a second opinion with no cost, no obligation, and no annoying sales pitch by going to TalkingRealMoney.com or call 800-386-3004. That's 800-386-3004 or TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Welcome to the park. Welcome to Wisconsin. I'm Don. That's Tom. Literally, wow. Usually you're here on a screen.
Yeah, I know.
No, that's
a
actually
real person. Feel free to hit me right there in the head. Make sure it's real.
Yeah. No, I'm afraid.
I'm more afraid, actually.
You're really here. It's frightening. 855-935-TALK is our phone number. That's 855-935-8255. Give us a call if you want to talk about money matters, because we know that your money matters and that you want more of it. Is that a cicada?
I don't know.
I think that's probably a cicada.
They sound loud.
That's the only one left.
Okay.
Earlier this year, there were lots of them.
Well, when I arrived here, there were a lot of them, I tell you. Anyway.
No, if they get going, then you're not going to be able to hear us anymore.
I know. The one earlier
all right,
was
guys,
loud. So
quiet. Shh. Cicadas. It's enough. I forgot what I was saying. Yeah. Oh, okay. We're talking about money. And the one thing we find that we all have in common is our great desire to make more money. And we're willing to suspend disbelief if somebody tells us that we can make more money with a low level of risk.
And this story we're talking about is how people put money into online savings, which is something, by the way, we've told people, but the only time we tell people to do that is using an FDIC insured bank. Period. No secondary person.
That's the difference. Yeah. It's the middle people that make this different.
And they were offering rates that were
comparable.
Yeah, a little higher. I mean, and so people thought, well, okay, that makes sense. Somebody put in $30,000. The bottom line is people have been stuck that can't get their money back.
Well, with one company.
One company went bankrupt.
And now the FDIC is trying to sort this out, really trying to understand what was done and whether or not they have an obligation,
jurisdiction
to cover these, and they're not sure, which could leave a lot of people without a lot of money.
Yeah, no, I mean, we're not talking. I think, as I say, one was 50 million. I mean, so this is not a good situation. But
now these things are done differently. These are done differently. They like Yield Street floats notes that can go into a variety of things. So they're all a little different, but the one common denominator, and this is why we need you to be
vigilant.
Vigilant. That's a great word.
Thank you.
We need you to be vigilant, because nobody's going to tell you what the real downside is likely to be, because, well, they don't even want to think about the real downside.
What happens if this happens?
What happens if this happens?
Right, yeah. And that's exactly what has occurred here. And people were in denial about the fact that it might happen. That's a problem. So.
And the other thing is that not only do we have these, the some of the companies I just mentioned, Yield Street, and what was the one that went bankrupt?
It wasn't Yada. It was one of the other ones.
No, it wasn't Yada.
Starts with
now I
an
have to
S,
go back
I
to
think.
I don't have my computer with me. I only have my iPad, so I'm switching.
Only haul so much weight around in that trailer, dude.
No kidding.
Silver bullets got to survive.
All right, that was from the New York Times. There we go. Juno, Yield Street, yada. But the one that went down was a company called Synapse Financial Technology.
Yeah, you got money there, you might want to check twice because
and
not
again,
looking good.
This is legal. They get the money from you. They hand it to regular old banks that are willing to pay higher interest because they need to capitalize their and these are little banks.
Yep.
These are baby banks. And but they're remember, FDIC insurance was originally set up to provide $100,000, then $250,000 per account to individuals. It wasn't meant for this purpose, and that's where this creativity on the part of some of these technology firms really does potentially cause some problems.
Has caused problems. I mean, this is not potentially because people haven't been able to get to their money.
Yeah, and so these people may not get it. That's why you have to be very, very careful no matter what people tell you. And, we were talking about this last night at dinner. Don't believe anybody, even us.
Yeah, what was the quote that the fella had? It was, trust me, I'm lying. I think it was the line, a pretty good line. So, yeah, scary.
Don't even trust us. You've got to make sure that you check these things out and look at every possible problem. And if somebody says, oh, yeah, higher yield, absolutely guaranteed going to work. No. You can be, you can be confident that if somebody is quoting you a higher yield than you can get almost anywhere else legitimately, a higher yield than you can get with a treasury security of the same maturity.
Yeah, how are they paying more?
How are they paying more? The only way to do it is to take more risk, period. When a mutual fund says, we can grow your money faster than somebody else, and we've done it in the past, well, they may have done it, but they didn't do it with the same level of risk as the market itself. That's an almost absolute. It's so close to an absolute. You have to adopt that as your belief system.
Isn't that, if it sounds too good to be true, then it is? I mean, it really is, right? Because that's exactly what we're saying. And by the way, places I do trust major banks. I do trust the banks that they list. I don't
trust them. I trust the fact that they have FDIC insurance.
You'll get your money back. I do trust the banks that they listed, bankrate.com. Those are FDIC that we send people. Go look at the rates there. I believe you'll get, you're right, trust is one word. You'll get your money back from those. But you get into these situations. If somebody had come to me, I would have said, how are they doing this? How are they paying out something more than everyone else is?
Often we will tell you, when you call us with an investment that you're possibly concerned about or that you want to vet, often we don't know. We can't know what's going to go wrong we can't know. It's impossible to know the future. And sometimes we can't predict what will be wrong, but we can, because we've been doing this for so long.
We've seen a lot.
We can tell you that yields that sound too good to be true, returns that sound too good to be true, eventually end up being too good to be true. Eventually. Now, you may be the lucky one who makes out like a bandit.
Gets it out, and then you're okay. But then
you may be the lucky one who wins on a scratch off or the Powerball. You may be that one. You may be the one who wins big when you walk into a casino. But you see, on all of those things, most of you are smart enough to know that you're not.
But it's back to what you said at the beginning. We are willing to suspend disbelief because I'm making 1% more than
and somebody who sounds. See, you don't have people at the front door of a casino dressed in a very nice Savile Row suit, with a mahogany desk and saying come on into our casino. There's a lot of money to be made because we're professionals, and you're gonna clean up at our casino. You see, casinos don't lie to you. They entice you, but basically they're not saying you're going to win. You could win.
Just talked to somebody today who used to own a casino and said, yes, the house always wins. Always wins. So believe it or not, but it's true.
And so that's the problem with the financial services industry, is that they have this level of trust that exceeds their competency and their abilities. It well exceeds them. So you've got to disbelieve everybody before you believe. 855-935-TALK is our phone number. Give us a call. We'd love to talk to you in the park.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
Tom and I are in the park. We're just hanging out at, what's the name of it? Goodland.
No, Goodland.
Goodland.
Yeah, Goodland. There's a lake right there. I can't pronounce how to say
There's
that.
There's a lake right there.
It starts with a W and ends with an A, I think, or something. So I apologize that I don't know.
You're not from Madison, are you?
Or something. No.
Yeah, okay.
Only for the last few days.
Worked out.
Which have been delightful.
We are talking real money in the park in Wisconsin. I'm Don McDonald, Tom Cox with me, and, well, we're glad you're there. 855-935-TALK is our phone number, 855-935-8255. And from Wisconsin, we head to New York. The people are listening to us live all over the place. Mark, welcome to Talking Real Money.
Hi, how you guys doing?
Good, thanks.
I wanted to pick your brain, the two of you, your accumulative brains. I have, with my wife, 2 pensions because we both work for the state, and it's going to come to about 100 gross. Our expenses are about 120, and we have about 1.2 in retirement. I'm wondering what percentage I should put in equity. I don't know that it's much necessary to do any bonds currently. Maybe later.
Okay, wait. Why do you say that? I want to get you that answer because we hear that a lot. I don't feel there's any need for bonds right now. Why?
I know that there will be a correction at some point, but I feel that we have probably 30 to 40 years to go. We won't be getting into our assets that much, especially once we get to Social Security.
Oh, okay, but I guess I'm trying to understand the correction. What are you talking about?
He's saying stocks will go down.
Oh, stocks will go down. Okay.
Yeah, okay, but back to your. So what I'm trying to make sure I'm understanding your question here. So what you're saying is, we do not need to draw from our portfolio for a long time. Is that what I'm hearing?
Yeah.
Okay.
Yeah. And so you're saying, therefore, because we can take the volatility, I'd rather have it all in stocks or equities, as you said, and none in fixed income or bonds. That's what you're asking, correct?
Yeah. Maybe not zero. I'm almost thinking, for the percentage that I probably would put in bonds, to put it in a target date fund that would kind of soften things, one that's more.
Well, that would depend on the year of the target date fund. If you put it in the 2060 target date fund, you won't get a whole lot of bonds. Yeah. So,
do you know your comfort level with risk? Do you know how you react in a 50% decline?
Yes, because we've already been through that a few times. You just keep driving and hope you're still contributing. Unfortunately, I won't be doing that.
Yeah, I would. Here's my take. I would still, if I was retired, I would still have something in fixed income for the following reason. Something happens in your life that requires money outside of the 2 pensions and Social Security, all the fixed income that you're getting. You need to go to that portfolio for some reason. I don't know what reason, whether it's health or whatever. I just had to go to my portfolio to buy a new house. Yuck. Anyway, it comes up, and it turned out it was a pretty good thing to have something in fixed income because for 2 reasons. Number one, the stocks had gone up a lot, so every dollar I'd sold in stocks, I had to pay a big tax. Number 2 is those bonds will be stable for you. And so if stocks are off 50% and you got to draw on something that's down 50%, that is a crummy strategy.
And let me tell you, both Tom and I are longtime risk takers. We are both but we're both of retirement.
I was going to make a joke
age.
about my first marriage there, but I won't.
Yeah, it was a risk. We're risk takers, but both of us have bonds in our portfolio to a relatively substantial level. I think I'm 30.
I'm 20.
And he's
20. Yeah.
So I'm thinking, just to be prudent, it would probably be wise to be either 80-20 bonds, stocks, and probably that's the easiest way to go, just with an intermediate term bond fund and just let it ride.
Here's the other thing about owning some bonds. They're a different type of security. They're going to act differently in the future. You're just diversifying your holdings.
Yeah, you're reducing the zigging and zagging.
Yeah.
Which traditional probably, right, for the bond portion?
You put the bonds in your IRA? Is that what you're saying?
In the traditional, yeah.
That's the right place for fixed income.
That's a good spot for them
reasons.
because they're taxable on a regular basis. So we would have some bonds. I got to tell you, I think I would be irresponsible to tell anybody at pretty much any age, unless you're a brand new young investor and you're still adding money, to be 100% equities. 855-935-TALK. Give us a call.
Tom and Don are talking real money. Reality radio for a really great future. We're talking real money.
Well, now it's almost like being in Florida and Seattle because I can't look at him because
if you do, the wind will blow your way.
Because the winds come whipping down the plane.
It really did.
Tom, what's that from?
I think Oklahoma?
Oklahoma.
Okay,
you got that one right.
I love that one.
Good job. 855-935-TALK is our phone number. 855-935-8255. And Isaac, you're up next. Welcome to Talking Real Money.
Yeah, thanks for taking my call. I was wondering if you guys can settle the debate between my wife and I.
No, okay? We don't do that kind of work. That's Dr. Phil. He's on after us.
No. Now that Dr. Phil's off TV, I'm taking over. Yeah,
no,
thank you. Yeah. All right. Go ahead.
He won't. I won't dare to do it.
Care. Yeah, sure.
Okay, so one of us wants to save for retirement and slowly increase it as much as possible each year.
Mm-hmm.
And the other one wants to do the minimum, like to the company match, and that's it. The reason why is my dad died fairly young. Her mom died fairly young. And so one of us is saying, well, what if we die young? We won't be able to enjoy it if we're just saving for it. And the other one's like, well, let's save for it in case we have it. So I guess at the end of the day, what percentage should we be stocking away, or how much should we be saving for retirement?
How old are you guys?
That makes sense.
How old are you guys?
39 and she's 38.
You're young.
So I'm 39, 38. Yeah. Oh, yeah. We're way young.
I mean, this gets back to like nobody knows what their life is, how long it's going to be. Like, I might not live that long.
It really doesn't follow that you're going to live however long your parents lived. No. It doesn't.
So, I mean, I would still be, I think for anybody in their 30s, especially, it should be 15% plus the match.
So so right now we're doing about 18%, and I kind of want to go higher. So you think kind of like the 15, 18, we're kind of good.
I think if you're saving that much, she's right.
Money.
She's right. Money is also for living.
Oh, how did you know it was the wife who was saying that she didn't want to spend as much? He didn't say that.
I know, but I know.
Oh, you inferred from that. Good work, man.
I was
you really
right.
know how to make friends, don't you?
I know I was right. Am I right?
Oh, absolutely.
Yeah.
Oh, okay. Yeah. All right. Thanks a lot.
Yeah. And you should. Life. We only get a tiny little helping of it. I'm a big believer in enjoying it.
I agree. I just finished the book.
Tom
Die with Zero.
definitely does because he went to Africa.
And then I bought another house, and I'm going to end up living with you probably in the trailer. So,
oh please, there is no room with Debbie and 2 dogs. It's it. That's it.
So yeah, I'm a believer in that. I'm a believer. I love the book Die with Zero. I thought it was spot on. There's no reason to die with $1 gazillion. Live your life.
Yep.
Go to garage sales. You just never know what you might find there, that kind of thing.
Sorry, Isaac, your wife wins.
Yeah.
All right.
But he doesn't have to tell her.
Question?
Yeah, go ahead.
Yeah, go ahead.
Are you coming through Utah, Don?
I might on my way back home.
Back on the road trip?
The trip home is up in the air still.
Excuse me.
So I'm not sure yet, but probably Utah seems to be in the way. No matter what route I take, Utah's kind of just there. It says, gotta go through you.
That's our state motto. We're always in the way.
Yeah. Always in the way. Utah's in the way.
Why'd you have a suggestion for me?
Always in the way.
Well, I think he wants you to come and see him.
We wanted to chase down your trailer.
What neck of the woods are you in Utah? Where are you?
Down the road. So we're in Tooele. It's just off of I-80, west of Salt Lake.
West of Salt Lake. Okay. I can tell you one of the things that I've done so far is I've tried to, like the plague, avoid interstate highways. I love driving back roads. I love, but maybe I'll let you know when I know.
Okay.
He's just trying to get to the West Coast at this point. We'll see what happens from there.
Hopefully I'll get to the West Coast. I'm not planning past that. The whole thing may fall off while I'm there. You know how the West Coast can be.
Exactly.
855-935-TALK is our phone number, 855-935-8255. Fred in Dayton, Ohio. Darn, I was really close to you a couple days ago. Hi, Fred.
Hey, I was waving to you. I didn't know if you saw me.
I didn't, but I really was trying to keep the trailer on the road. That was my main concern.
Good thinking.
I know. I was just kidding you. Hey, Tom, welcome back home.
Thank you.
And Don, happy trails and safe trails to you on your little escapade.
Yeah.
And
it's a good name
for it. A question for you is probably what would you guys do? My wife and I were both 65. We have probably about $1 million in savings, which is investments, and we can live off our basically our pensions and retirement money. And I want to get out of the hodgepodge-itis and liquidate. I'm about ready to go all in cash and just go ahead and go into 2 or 3 funds. What would you recommend?
No, he's going to sell everything he's got and then move to 2 to 3 funds.
Okay.
And is it all in one account, one type of account?
That's what I'm hoping.
No, they're basically half in my accounts and my IRAs and half in my wife's IRAs. So
okay, but they're all in IRAs
together as one portfolio.
It's all in IRAs. Okay, good. I was worried about that.
All in IRAs except for about 300 plus in cash. So I want to start doing some Roth conversions too before we hit our RMDs. So, but I want to get out of the hodgepodge-itis. I want to quit looking at my funds every other day, and I just want to basically get to the 4% withdrawal rate and live the rest of my life until we can't live anymore.
If I was going to do 2 funds, I'd do AVGE for the stock fund. I'd put 60% in that and then 40 in BND.
If you're looking for sheer simplicity, yep.
Okay.
And then rebalance every year.
That's what I was planning to do. Yeah, but do I just go ahead and sell everything I have now?
Who cares?
I mean,
it's basically a lateral move.
Yeah,
I don't care what the details of the portfolio are, but if you have a balanced hodgepodge, then it's going to be a lateral move, probably from inferior funds in terms of diversification and cost into superior funds with better diversification and lower costs. So why not do it now? Now would be.
And I think when you may be asking,
now is always the best time.
Yeah, but we have the election, but we have the interest rates, but we have the economy.
All that stuff just happens.
There's going to be a new list in a couple months. So, yeah, I would go ahead and make the move now. Did you say balanced hodgepodge? What is balanced hodgepodge?
A lot of stuff, but still reasonably well balanced.
Oh, okay. That's a qualifier. If I've ever heard one.
Exactly. Yeah. I have some index funds, and I have some separate stocks. And
individual stocks?
Yeah, see, it's time to change. Yeah. We gave you the right answer.
Yep.
We're just getting into the weeds, and literally we're surrounded by weeds. So we don't need to go out in those.
I'm
sure there are cicadas out there.
Come
on. Do it. Just do it. 855-935-TALK is our phone number. Give us a call, please.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
Apparently, summer's a time for traveling in America because you and I are both doing it.
Yeah, and we've gotten calls from Utah, Ohio, New York. Yeah.
Seattle.
We're here with nice people from Madison. We got one
from Seattle.
Yeah, one from...
We do have people here from Madison.
Yeah, we do.
We'll have even more people here from Madison later for the free food.
The beer is cold. And a lot of it. Boy, I got...
And you got local beers, too. Well, you're in...
He said, buy more beer. You're in Wisconsin. I was like, okay, I'll do it.
He was going to go out and get a bunch of old Milwaukee, and I said, no, that's not real. That's not real beer.
Got to go with the local brew.
Skip that stuff.
Well, anyway.
So it just so happened that Tom and I have met up in the middle of the country. As I am driving from Florida to Seattle, Tom merely hopped on a plane and flew to Milwaukee.
Not lazy. What can you say?
Yeah. And so we're here together doing a show, and we hope you'll join us by calling us at 855-935-TALK, by going online to talkingrealmoney.com, where you can find all kinds of great stuff and listen to the podcasts, where you can kind of sort of follow the trip, but we're doing it a different way.
You got to go to Debbie's page or something.
Yeah. And it's so funny. She said, did your show just air or something? I said, yeah, the Saturday show. There was a Saturday show where we mentioned it last Saturday.
Oh, that's right.
And that's because she goes, there are all these people wanting to friend me.
Oh.
And she goes, do you know any of these people? I went, how am I going to know these people? They're our listeners. I don't know them. So she's getting all these friend requests. I think she likes it.
I think she really likes it.
She likes it. So you can follow along on the trip at Debbie's Facebook page.
So you have to type in Debbie with one B McDonald
and not Debbie Facebook. McDonald for Crowa.
No, that was when she ran for the election. HOA. We're not talking about that anymore.
So you can follow the trip.
All right.
You can join us in a couple of places coming up. We've got Retire Meet East coming up in
October 19th.
October 19th
That's
in
right.
Hartford, Connecticut.
Mm-hmm.
And we will also, I'll be out in the Seattle area. So I'm sure we're going to do something out there. I don't know what, but we'll figure something out.
Lake Chelan, come on by and offer us some cold beer on Lake Chelan. We're up for that too.
Yeah, that Washington beer.
Sure. Why not?
There's a lot of beer in Washington.
Yeah, there is. So
that's true. We're vacationing in Lake Chelan.
That we are.
That's what.
What's the name of this lake again? Wabisa. See,
that was easier than you made it sound.
I know. It looks hard to say it.
So we're here by a lake.
Lake Wabisa. So beautiful.
And we were also doing our big Madison cookout tonight.
That's right. You can see all the hamburgers and brats lined up, but they're
not here yet. They'll be here in a bit. Right. And one more thing. Oh, somebody just cheered.
I don't know what that was about. But
Thank you. Thank you all so much.
Sure. Yeah.
One more thing. If you'd like some help, some real help with your money, your portfolio, just some ideas about what have you gotten yourself into? How much is this stuff costing you? Are you on the right track for your future? Most people are going to tell you they'll do that for you through what is called a free consultation. We'll actually do that for you. We'll just help you for free because we found that helping you for free is actually pretty darn good for business. So if you want to set up an appointment, just go to talkingrealmoney.com and click on the button that says Meet an Advisor right there, talkingrealmoney.com.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions.
Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy.
Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor.
Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services.
Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. I think I need a nap.